Good morning. You're watching All You Need to Know on Bloomberg Quint and Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the F&O setup and I'll tell you what the normal trade setup is. So first, let's take a look at the SGX Nifty because that will give us an indication of how our markets will open. So from a negative 22 points, it's moved up into the positive. So expect, but still it'll be a muted start for our markets. So the SGX Nifty indicating a muted start as far as our market is concerned. The ADRs, however, were rather weak. Tata Motors was down almost close to 5%. You have your ICICI Bank, you have your HDFC. All of them were down in trade. So ICICI Bank was down close to 3.5%. HDFC was also down. Dr. Reddy was down 2.2%. Infosys was the only ADR that ended with a positive bias. Now let's look at how the commodity is spacing out. So crude surged almost 3.5% overnight. So after a 2.5% move the day before, it's moved another 3.5%. So strong moves coming in from crude. Brent is trading above close to the $64 barrel per mark, and WTI is now at the $57 barrel per mark. As far as base metals are concerned, very weak closing by the base metals on LME. Most of the base metals were down anywhere between 1.5% to 2%. So just take a look at which were down in trade. So copper, zinc and nickel were down over 2%. Aluminium was down almost 1.8%. But the start for COMEX copper is with a positive bias. But again, as far as Shanghai is concerned, again it was a weak opening for most of the base metals. So let's take a look at which are the base metals which are not doing well. So copper is down 2%, aluminium is down 1%, steel and rubber are down close to 1%. So that's the general commodity trade up. Gold is trading muted. Yesterday it dropped almost 0.5% overnight. As far as fund flows are concerned, FIIs were net buyers to the tune of 461 crores. DI sold in almost 2,000 crores in the cash market. They sold in 2,400 crores in the cash market yesterday. The Nifty was down 100 points. On a month-to-date basis, FIIs have been aggressive net buyers to the tune of 3,700 crores, and whatever they bought, DIs have been net sellers, and majority of it coming in trade yesterday. So DIs were net sellers to the tune of almost 3,400 crores in the cash market. What didn't do well or what did well yesterday? IT was one of the sectors that did well. It was one of the best performing sectors, and in the ADR side, Infosys was up in trade. What did do well was the Nifty Pharma Index. Lupin was the one that dragged down the entire index because of the adverse US FDA action, and Nifty PSU Banking Index is seeing a lot of traction on the lower end. The Nifty was down 100 points. What contributed? IT, Infosys, TCS, HCL did well. HPCL did well. It was the only oil company that did well. Obviously, this new note coming out overnight in terms of HPCL values being much higher. What did do well? The banking space, SBI, HDFC, and pharma space, Lupin. 100 points down, Agam, on the Nifty. What can we expect?
Darshan, I agree. And, we could see a lot of selling pressure as we saw yesterday. A lot of unwinding took place when it comes to the Nifty futures, and that will be apparent in the change in open interest. As you can see here, a decline of nearly 5.5% towards the Nifty futures OI. And it is the same when it comes to the Nifty Bank as well. The index saw a lot of weakness, down as much as 1%, and the open interest also unwinded by to the extent of around 1.5%. The India Volatility Index, as we had highlighted yesterday, has moved up even further in anticipation of even more volatility. But the put-call ratio has come off to a certain extent, down at the mark of 1.43 against 1.55 because of the fact that the Nifty has also come off. And because of that, we've also seen a lot more writing in the 10,500 and the 10,600 calls, as you can see here. A lot of unwinding too in the 10,400 and 10,300 puts. But with that, we have India Cements, which has moved back into the F&O ban. And of course, Darshan alluded to the fact that Lupin saw a lot of weakness. In fact, when it comes to Lupin, we did see substantial increase in accumulation towards open interest, towards the fresh shorts. So there you have it. Lupin looking at nearly 34% increase in open interest. OFS, that is Oracle Financial as well, looking at fresh longs among the few counters which did well in yesterday's day of trade. But on the whole, all eyes will continue to be on the pharmaceutical space.
Stock of the day is Butterfly Gandhimathi Appliance. Now, extremely good set of numbers coming in from that counter. Revenue, if you see, has risen as much as 30% for this counter at a figure of around 201 crore as compared to nearly 155 crores seen in the base quarter. If you look at the net profit, that's a 20%, 20-fold jump there for this counter. The numbers have come at 11.5 crore as a comparative of 0.55 crore in the corresponding quarter. So huge set of numbers, good set of numbers on account of the festive season. And also EBITDA, if you see, it's up by 89% for this counter at 17 crore as compared to a 9 crore figure that we've seen in the corresponding quarter of the previous year. Margins for that matter too have expanded at 8.45% as compared to 5.86% seen in the corresponding quarter of the previous year. Now, higher sales combined with your operational efficiencies have led to a good bottom line performance. If you see the raw material cost, that as a percentage to net sales has come down to 59 from 62% earlier. Also, we've seen a sharp jump in other income. Along with that, lower finance cost, other expenses and higher other income has what's gone behind the making of this number. Extremely good set of numbers now. If you look at the finance cost, that's almost half to 3.69 crore as compared to 6.82 crores seen in the corresponding quarter. Other income has gone up as much as 32% for this counter. Now, decline in financial liabilities has led to interest cost saving for this company. To give you a little background about what we are talking now, it's a small cap company that we are talking about with the market capitalization of 600 crore. It's a flagship company of Butterfly Group, and it's a South-based company mainly which operates into makes and manufactures household appliances for that matter. With this next, let's toss it over to Saloni for currency market updates.
Well, talking about Indian rupee, it was quite a volatile session of trade yesterday. It opened at 64.65 levels against the dollar. However, it fell sharply by 38 paise to end at 65.03 levels against the dollar. Now, a fall in the domestic markets along with fresh dollar demand on the back of rising crude oil prices mainly pressurized the home currency. The home currency has depreciated approximately by 50 paise in the past two trading sessions. On the global front, dollar index ended higher at 94.91 levels on the back of strong labor market data. However, it is now trading 0.1% lower ahead of the release of Chinese trade balance data today morning. Coming back home, dollar rupee is trading at 65.17 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Moving on to bond markets, the 10-year benchmark yield ended 4 basis points higher at 6.92%, its highest close in over 6 months. And lastly, global funds reduced their rupee debt holdings for the second consecutive session yesterday. They reduced by approximately 470 crores according to NSDL data.
Well, amongst the stocks to watch is Bharti Airtel, where a Qatar fund will sell up to 5% stake in the company for about 470 to 480 per share. Now, this is a huge 7% discount to yesterday's closing price of 514. So, you could see some negative reaction on the stock price. You also have an ET report which says that PE majors are vying for up to 13% stake in Aditya Birla Retail, which is the supermarkets and the hypermarkets arm of the Aditya Birla Group. So that's what we are watching out for as well. You also have Axis Bank, which is approved in the board or will have a board meeting on November 10th to consider fundraising plans. Now remember, last week some of the newspapers had reported that Bain Capital was interested in buying a stake, so do watch out for that name as well. You also have JSW Energy, which has received an order to supply 200 megawatt power to Karnataka, so you could see some positive reaction on JSW Energy. That apart, you also have AdLabs Entertainment, which was looking to monetize its non-core assets. Now they are going to sell the Novotel Imagica Kopoli Hotel for 213 crores, and they're also going to sell Walk Water stakes to Blue Haven in a 150 crore deal. So cumulatively, they're looking to reduce debt by about 350 crores. So we could see some positive reaction on that name. You also have the paints company AkzoNobel, which will divest its specialty chemicals business in India to garner about 320 crores. So again, you could see some positive reaction there. And that apart, we are also tracking Delta Corp on the back of bulk deals, where yesterday you had Rakesh Jhunjhunwala's wife, Rekha Rakesh Jhunjhunwala, selling about 0.9% stake. Now, as of 30th September, both Rakesh and Rekha Jhunjhunwala together held about 8.4% stake in the company. So you could see some reaction there as well.
we are expecting a healthy second quarter for Ashok Leyland. And remember, in the second quarter, the company posted a total sales volume growth of 23%, and that will be clearly driving the top line growth along with the realization growth, which is expected to be close to 8 to 10%. So we are expecting almost a 33% increase in the revenues for Ashok Leyland. Of course, this time because of commodity cost pressures, we could see some decline in the absolute EBITDA and the EBITDA margins. But if you look at the profits, we are again expecting them to rise close to 30 to 33% to come in close to 385 crores. Margins will see a decline of nearly 50 basis points on a year-on-year basis to come in at close to 11%. Of course, apart from the earnings, the key factors to watch out for in Ashok Leyland will be the management commentary on the domestic CV cycle and demand moving forward, especially in the second half. How do they see the M&H and CV segment perform, and also the kind of export market pickup that they see moving forward. So on an overall basis for Ashok Leyland, apart from the management commentary, we'll watch out for the margin picture, which is expected to be close to 11% for the quarter.
Okay, pharma news in focus. First, let's talk about Taro. Company came out with numbers today. It's a subsidiary of Sun Pharma, contributes almost 20 to 25% of the top line. So strong set of numbers coming in from Taro on a year-on-year basis. Obviously, it will look lower, but it's coming much ahead of what the street was anticipating. The biggest note that the preview note was against Credit Suisse. So if you're looking at the top line, came in at $170 million versus Credit Suisse estimate of $158 million. Profits coming in a beat of $10 million versus estimates, and margins coming in at 52.2% versus the estimate of 49.4%. Even though company is saying that they see continued increased competition and challenging pricing environment, the company did manage to see a volume growth that came in. There was this forex loss of $46 million that impacted the profit. So overall, the management commentary was strong. Credit Suisse has already come out with a note on Taro indicating that they believe that the second half will be better for them and the price erosion will now stop. It's at its bottom. So that's on Sun Pharma, which probably may react positively. On Lupin, the company held a conference call. The news was obviously out during market hours. The main thing that they point out is that they don't believe that there is any data integrity in any of the plants. We haven't seen the warning letter because it's not uploaded. So this is the management interpretation. The two issues where the FDA was not satisfied with the responses of Lupin for both the plants was out of specification results and hold time studies. So these were the two issues in which there was issue, and these were common to both the plants. The US FDA wants Lupin to conduct whole time studies with a retrospective effect. So Lupin will now go back to the FDA to get a sense of what exactly they have to do. But as far as products are concerned, 50 products are pending approval from these two plants, out of which Lupin believes that 25 to 30 will be affected because of the warning letter, because they are in the near term. As far as some of the products they want to shift, 12 products are something that they identified that they would want to shift. They are saying that they cannot comment on how much Goa and Indore Unit 2 contribute, but they have said that it's only related to Indore Unit 2. So Unit 1 and Unit 3 are separate units and they are not affected by the US FDA. So that's the entire scene on the pharma space. But it's 1 year to demonetization, and Harvard University professor Kenneth Rogoff spoke to Bloomberg Quint on demonetization. Let's listen in to what he had to say.
Obviously, I was quite surprised. I didn't have any word that this was going to happen. My own plan for reducing the use of cash involves doing it very slowly, and not to seize the currency out there, but just to make it more difficult to use cash to do large-scale transactions. I think that can be achieved. The trouble with doing a surprise attack, as India did, is the collateral damage is so much that you can't really squeeze out the black money. You can't, you don't have the time, you don't have the people to try to sort through everything. But I must say, a year later, it's been a bigger political success than I might have imagined. And if the Prime Minister continues to capitalize on that to try to root out corruption, to try to make the Indian economy more efficient, it could end up being judged a success.
Professor Rogoff, as an economist, can you sort of explain to us how this process works through the economy? You have a sudden shock which takes away a large amount of your cash in a cash-driven or a high-cash economy like India. Typically, how would you have expected it to play out through the economy, sir?
Well, you would expect that it would hit economic activity because India, although it's moving towards more credit and it's taken some very important steps that the rest of the world hasn't in financial inclusion, in giving ordinary people debit accounts, it's not there yet. So you'd expect economic activity, particularly in the informal economy, to contract a lot. As in the event, the Indian people seem to have been incredibly creative. In fact, it reminds me somewhat of when a similar event happened in the United States in the Great Depression. Franklin Roosevelt, the new president, closed the banks when he was elected in the early 30s. And people didn't have access to cash. They didn't have access to their checking accounts. And yet the Americans, too, were very creative back then in continuing to do their business. The Indian change was even more dramatic in some ways. And it's really a surprise the damage wasn't much more.
On brokerages, first we have is Morgan Stanley on the banks. Now, since the recapitalization announcement, Axis Bank, ICICI Bank and SBI Bank have run up in the range of 17 to 20%. But post this run up, Morgan Stanley still believes there's further upside to this rally. Now, they have maintained their overweight rating on Axis, ICICI and SBI, but have hiked the target price. For Axis, they have hiked the target price to 630, and which suggests a potential upside of 20%. For ICICI, they have hiked the target price to 365, which suggests a potential upside of 17%. And for SBI, they have hiked the target price to 370, which suggests a potential upside of 17%. Now they're saying that the risk reward is significantly favorable for investors even from the current levels. Now post this recapitalization, there will be a good cleanup in the books of this large corporate lenders, and they're expecting the return on assets of ICICI, Axis and SBI to improve to 1.5%, 1.5% and 0.9%. They are also expecting some pickup in core pre-provisioning operating profits and they're expecting the net interest margins to improve from these levels. Now with recapitalization, the stressed asset resolution will accelerate for the banks, and they're expecting the banks to return faster to the normalized return on equity post this recapitalization. Second we have is UBS on Emami. Now they have maintained their buy rating on the stock, but have hiked the target price to 1500 from 1200. Now they're expecting volume growth to bounce back to 10 to 12% from a low growth phase. They're also saying that the market is concerned with the wholesale trade channels, but according to UBS, Emami's investment on direct distribution and cash and carry will augur well over the next 2 to 3 years. Now currently there are no signs of significant rural recovery, but if there's a rural recovery, then the company is well positioned to capture that. Also, the herbal preference of customers would help the company to retain customers going forward, and going forward, new product launches would be the key to sustain revenue momentum for the company. Now let's find out whether the government's plan for push for digital transaction has worked in favor of small reporters. My colleague Charlene D'Souza reports.
It's been a year since demonetization. In the initial months, digital transactions were on the rise due to a cash crunch in the system. Now that liquidity is back in the system, Confederation of All India Traders say that customers now are opting to pay by cash. I'm right now at Dada's retail market. Let's see retailers here offer digital option as a payment.
अभी मतलब कार्ड का ऑप्शन भी देते हैं पब्लिक, तो वो हिसाब से अभी हो रहा है रिस्पॉन्स, अच्छा है, रिस्पॉन्स आ रहा है कार्ड में भी. अभी फिलहाल 20% तक है, मतलब अभी आगे बढ़ने की संभावना है.
I would say 20 to 30% people are using cards. Now most of the people are having saving bank account card, so they're using that.
The Confederation of All India Traders says that in the initial months, due to a liquidity crunch, the rise in digital payments was as high as 50%, as merchants and customers didn't have a choice. Prior to demonetization, the use of debit and credit cards was as low as 2 to 3%. However, currently, the usage of digital payments in urban India stands at 20%, while in rural India, 5 to 7% of transactions at smaller retailers are done either through debit or credit cards.
कार्ड के लिए अभी ज़्यादा पूछते हैं, पहले नहीं पूछते थे, अब ज़्यादा पूछ रहे हैं लोग. पहले समझो 50 कार्ड पे था, 50 कैश पे था, अभी 80 कार्ड पे आ गया, 20 कैश पे आ गया. अभी 30% बढ़ गए हैं कार्ड वाले, कैश वाले कम हुए.
पहले तो 60-40 था, अभी 80% उसका हो गया है पूरा. पहले जो ग्राहकी था वो थोड़ा कम हो गया है इसका, थोड़ा
कैश के पेमेंट वाले
कैश के लिए ऐसा. और अभी पे अपना क्रेडिट कार्ड से तो अच्छा ग्राहक है, पे अपना हो रहा है ग्राहकी अपना. पेमेंट अच्छा आ रहा है उससे। पेटीएम से तो बहुत कम हो, इतना में हमारे इधर तो नहीं है।
Yeah, we do offer card payment options, but there is a little bit of rise in digital payments. Roughly around 20%. We started after post demonetization.
As liquidity has increased in the system and since an additional cost is levied on the usage of credit and debit cards, merchants have also started to push for customers to pay in cash.
Retailers at Dadar market say that they have witnessed a rise in digital transactions post demonetization. Some retailers say that they have seen a rise of up to 80% in digital transactions. This is Charlene D'Souza for Bloomberg Quint.
Now, Union Finance Minister Arun Jaitley and former Prime Minister Manmohan Singh clashed on Tuesday on the eve of the first anniversary of demonetization. First, it was former Prime Minister Manmohan Singh who reiterated the organized loot and legalized plunder remark that he had made in Parliament. This time, he made it in poll-bound Gujarat. Singh also called demonetization a reckless step which did not achieve any of its objectives. Finance Minister Arun Jaitley responded to that by saying that demonetization was an ethical drive and a moral step that made corruption difficult. He specifically responded to former Prime Minister's loot remarks, saying that the 2G scam, Commonwealth scam and coal scam were all instances of loot, and the anti-black money drive was a moral step. Listen in.
Tomorrow will mark exactly 1 year since the disastrous policy of demonetization was thrust on the people of our country. I say it with immense pain and a sense of deep responsibility that the 8th of November was a black day for our economy and indeed for our democracy. I repeat, as I stated in Parliament, this was organized loot and legalized plunder. None of the lessons from this monumental blunder have been learned by the Modi government.
निश्चित ही ये एक वाटरशेड मूवमेंट जिसे कहते हैं भारतीय अर्थव्यवस्था के लिए था। कोई डिमोनेटाइजेशन वन ऑफ सॉल्यूशन है कि इससे सारा समस्या हल हो जाएगी, ऐसा नहीं है। लेकिन इसने एक एजेंडा बदला और उस बदले एजेंडा में लेस कैश इकोनॉमी की तरफ हम जाएं। एन एंटी ब्लैक मनी स्टेप इज अ मॉरल स्टेप। What is morally and ethically correct has to be politically correct. लूट तो वो होती है जो 2G में हुई, जो कॉमनवेल्थ गेम्स के कॉन्ट्रैक्ट्स में हुई, जो कोल ब्लॉक के एलोकेशंस में हुई।
Now, here are a couple of stories that you should consider reading on the website BloombergQuint.com. First up, ride-hailing application Ola has announced a global partnership with technology giant Microsoft to build a new age connected vehicle platform for car manufacturers worldwide. The tool will enhance rider experience as well as for predictive maintenance of the cars. Now, Indian Overseas Bank posted a loss in the July-September quarter as provisions against bad loans increased. Net loss widened by nearly 60% to over 1,200 crore rupees. Total bad loans fell by nearly a percentage point as a percentage of advances on a sequential basis, that is, but still they stand at 22.7% of the bank's total loans. Let's now listen to Shrikant Chauhan of Kotak Securities on the road ahead for the bank Nifty.
I think they have fallen very badly, and it was mainly because of there was like a lot of trading positions. They were available at their important supports after like hitting their important highs. So I think because of that, the positions are like maybe people are exiting out of those positions. OBC looks short candidate at these levels because this particular stock is the weakest one, and so the stock is down by almost 5%. It is trading at 135 and it is heading for the levels of 127, 128. So here we can keep a stop loss at 138 and we can create some short positions on OBC because that looks weak. But I'm of the view that if we concentrate more on stock like Indian Bank or Bank of India, which are outperforming, and in this current fall, if we really want to choose any particular stock to buy with a positional point of view, then Indian Bank and Bank of India are showing a lot of strength and they are looking really good to buy even at current levels and more on dips.
Well, that was all you need to know going into trade today. A lot more coming up on the other side of this short break. Indian Open is up next. This is Bloomberg Quint.